So we have the third session, new payment rails, digital rupee, stable coins, and virtual digital assets. This session turns to the rails competing to carry India's future, the digital rupee, stable coins, and virtual digital assets. Can a sovereign CBDC and private stable coins genuinely coexist? And who should hold the pen on regulating the VDAs? To moderate this session, I invite Mr. Anirudh Rastogi, founder Ikigai Law. Mr. Anirudh, sir, welcome. Joining the panel, we have Ms. Megha Sidhu ma'am. She is a Joint Commissioner, Financial Action Task Force, Government of India. Mr. Manhar Garegrat, Senior Vice President and Country Head, India and Global Partnerships, Liminal Custody. Mr. Mandar Kagade, Founder and Principal, Black Dot Public Policy Advisors. And Mr. Abhijit Mukhopadhyay, Senior Research Consultant, Chintan Research Foundation.
Good afternoon. Hi. Sanjeev ji had almost declared lunch already, so I have the tough job of getting you to lunch rather quickly. And I'll try my level best to keep this to 50 minutes or less. We do have a fascinating panel today here. We have a bureaucrat, Ms. Megha Sidhu. We have an economist, Abhijit, a policy professional, Mandar, and an industry representative, Manhar, with a lot of myself moderating. Sure, sorry. We will attempt some crystal ball gazing on the future of payment rails. I hope you can hear me well now. And I'm going to start with some statistics here. Visa, the world's largest card network, clocked stablecoin settlement volumes this year at $4.5 billion in January of this year. And this was not a pilot announcement. This is actual production numbers, $4.5 billion. Global fiat-backed stablecoins, their supply exceeded $273 billion in March of 2026. And this number has grown by 40 times over the last 6 years. The ratio of payment volume to trading volume has inverted from about 20 to 80 in 2022 to now 60-40. Right? That's a big change. Now, what's interesting here is that of all the major stablecoin rail integrations announced this year, India is conspicuously missing. Right? And while we have attempted well to push our CBDC rails, the adoption rates are alarmingly low. Right? Now, this session is not about India bashing. We must acknowledge, and I'm the first one to do so, that the government and the central bank have a difficult task cut out for themselves from a regulatory and a monetary policy perspective, as Ms. Megha Sidhu can attest to and Abhijit can attest to. And we will discuss that a little bit here. But the larger question really is, can we as India afford to be on either side of the spectrum, right? On one end, where, and in the earlier session we discussed that CBDC is India's stable coin, right? So is that one end of the spectrum where we say that, well, we are going to find our own path. We don't necessarily need to marry into or stitch into the existing stablecoin rails being built worldwide. We'll do our own thing. Or the other side of the spectrum, which is where we go all in and adopt and be part of the global rails, which clearly is not happening, right? I mean, as of today, there are no signals that that's the way we are going. And therefore, then, do we find a middle path, right? And what is that middle path going to look like necessarily? Is it some kind of a hybrid with, CBDC rails as the base layer, innovation in the form of stablecoin, privately issued stablecoin sitting on top of it? Is that going to take the shape and form of our regulatory approach towards VDAs? Some kind of strategic ambiguity. We've not yet taken a position, but allowed the industry to operate with safeguards, right? So these are some approaches. It could be a third approach, and I'm very keen to hear what the four panelists think about. I'm going to start with Ms. Megha Sidhu here. And I want to understand, ma'am, what is the government's comfort today with our VDA and stablecoin industry? And when I say VDA and stablecoin, I don't assume that you look at both of these as one. So from a regulatory governance objective, from a monetary policy objective, for which I'll come to you, Abhijit, are these similar products, or do you look at them and wish to regulate them differently? How comfortable are we? Are we, as the government, looking at more onerous regulations, or are we looking at easing out? What's your projection?
Yeah, so hi, thank you, Abhirup, Anirudh for the question. So since morning we have been listening to similar discussions on the emerging financial technologies which we are having today. And your question has two things in it, and one is, the first thing is that are VDAs and stable coins, are these similar, and how does the government look at it from the point of view of regulation? So the understanding is that both of them are conceptually and practically very, very different from each other, because not very much, but the VDAs are a wider ecosystem in which I would say that the stable coins are a subset of it. And since I am working with the FATF cell of Department of Revenue, when we talk about regulation, we talk about the risks associated with the financial sector which we are looking at. So in the FATF terminology, both of these are categorized as new emerging technologies. And there is a special recommendation under the FATF standards which deals with this. And the main concern for us is the risk associated with the new technologies, emerging technologies, related to the money laundering and terrorism financing part. So coming back to the VDAs and a smaller subset of it being the stable coins, the government's approach is based on basically two principles, which is your technology neutrality as well as the risk associated with that technology. So if the risk associated with the VDA or to a smaller subset is high, and if it is similar, then the regulation will also follow a similar path. So if both of them have some sort of different risk landscape, then the regulation will follow that part. Yes.
So I take from that the government is not necessarily looking to regulate stable coins and VDAs as separate. It is more a risk-appropriate response to either. And with that, Abhijit, I'll come to you, and maybe if you can apply a monetary economics lens and tell us if you also agree with that regulatory approach. Do you look at both as similar or not?
Am I audible? Yeah. Right. I'll very quickly come to the point because, yes, broadly I agree. There is no doubt about it because virtual digital assets are, it is something like somebody creates a digital kind of, painting and then it is getting sold. So there is nothing wrong about that. More than VDA, I think the entire question is actually about the cryptocurrencies. Let us come to the point, straightforward way. If the issue is about cryptocurrency, as an economist, as a student of economics, I come to the straight point that there is a hard ceiling, in the number of bitcoins that we can have. I think, somewhere around 21 million or something like that. There actually comes the valuation of each of these coins. That there is an entire class, some of them are popular, most of them are not. Those kind of intricacies I am not getting into. Definitely then comes the question that ultimately whenever there is a, let us talk about a hypothetical situation. In a hypothetical situation, whenever we are, it will never happen, not in near future, definitely, there is no doubt about it. But suppose if only cryptocurrencies are used for, let's say, all kinds of cross-border, transaction or that kind of a thing, then the problem comes directly to the money supply. It is the question of that will the central bank have the authority to, regulate the money supply, which is one of the most important monetary policy instrument in the hand of the central bank. They can't relinquish it. That is where the entire philosophy is coming in. Not recognizing cryptocurrencies, not recognizing, these kind of transactions legally, not legalizing it. But mind it, they're not delegalizing it also. What now is actually happening is ring fencing. I would rather say the entire thing is getting ring fenced in a way, precisely for the reason what Megha was talking about. Number one is the money laundering and second is the, terrorism finance. These two are the major concerns. So my short point will be, it is still evolving. We are talking about a space which is absolutely evolving. And since it is evolving, everybody is waiting and watching. I am including the industries also. And then that is why the regulation is also ambiguous. So there is no logical, discrepancy here. I'll stop there.
So I'll come to the ambiguity in regulation in a little bit. But I do want to push back a little bit against this, kind of treating stablecoins and VDAs as sort of similar instruments. And if you look at this slightly, go back in time, maybe 2 or 3 years ago, stablecoins were largely used to hold value and on-ramp onto VDAs. And VDAs, there are all kinds of VDAs that have existed, were really touted as the future of finance in many different ways. I think the narrative has significantly changed today, right? Where stablecoins have taken a life of their own. They are not a means to an end, which is a means to on-ramping onto VDA. They are the rails themselves, right? And as both of these are sort of serving very, very different objectives in global finance, shouldn't we be taking a regulatory approach also, which is sort of unique, right, to stablecoins, separate to stablecoins and VDAs? Manhar, Mandar, Megha, if either of you want to go on.
You want to go first? No, so, hi.
Okay.
Maybe you can start with.
Start with you.
Okay. So, no, I'll basically, yes, stable coins, if you go back in financial history, you have a certain construct that was known. Some of us in this room might be more familiar with it than others. Certainly, I was born later, but it's known as euro dollars. So, stable coins is nothing but a modern variant of euro dollars, which basically euro dollars were an idea. It was a dollar-pegged currency. So likewise, stable coins, clearly the more dominant ones, are USD pegged. So that is the concept. Conceptually, therefore, it is very different from, I will use digital assets, proper. Which is basically in Indian regulatory parlance is called VDAs. So it's very different from the VDAs as we know, which is basically a speculative use case. One can say that investment is a use case, and that is where predominantly it went, although that wasn't the intent for the classical 2008, class of 2008 investors and enthusiasts. As such, therefore, in my view, and this would be my preliminary view, and then I'll basically weigh in as we go along, is that as a natural consequence of this taxonomy, stablecoins ought to be regulated differently. And I can suggest, in the previous panel we spoke about domestic payment rails and so forth. So the closest approximation that one can have is the PPIs, right? PPIs, for instance, are the closest proxy that we have for stablecoins in the domestic context. In the international context, stablecoins could be just a B2B settlement asset, which basically elsewhere where there is a taxonomy around it and AML compliance around it, a framework around it, that's how we see that used. The VDA proper, that is to say the digital assets excluding stablecoins, have a different use case and therefore a different regulatory framework will apply to them. The closest framework that one can have, borrowing from what we already know, since 1991 we've done exceedingly well at that, is the securities market, the public securities market. And therefore, the corresponding corollary being that the regulators respectively would follow the logical sequence from my, my description. So I'll stop here. I'll let Manhar and ma'am weigh in, and then I'll come back to this point. Thank you.
Just to add on the issue of regulation, as we already are aware of this, that the VDAs or the WASPs, the service providers, are now having a regulator, which is our FIU India. And many of the WASPs which are operating domestically are on board with the FIU, and the number is constantly increasing. And so this is basically related to the AML-CFT regulation which is there. So the FIU is the AML-CFT regulator. So for that part, we, from the government side, that kind of regulation is being taken care of. And then there are the sanctions, actions taken, the enforcement actions taken against those which are not complying to the AML-CFT compliances which they are required to make. But that is that I think will be the next part of the discussion. But yes, from the regulation point of view, the VDAs in India are to a very large extent being under the regulation from the point of view of AML-CFT.
So I just want to add a slightly different perspective here. If you think about it technically, what are stable coins? They're effectively, we talk about tokenized assets and we talk about them in a very different light. Why? Because they have an underlying. Okay, it's not made out of thin air. Right? You can actually apply that same principle to stable coins. It has cash reserves, cash balances, and equivalents at the base, and then it's been issued. Okay, so it has an underlying, a very solid underlying. The second most important aspect, to think about here is that it's a beautiful marriage, in my opinion, of this technology of blockchain and then our traditional sense of compliance is required in the finance world. Because throughout history we've seen so many instances of different kinds of incidents, so many kinds of loopholes being created, and the regulators have constantly caught up to those, right? So the knowledge that we've gained today as regulators and these massive frameworks that we see today are not based out of thin air. They've been built over years. So stable coins, I see them as a very beautiful marriage of both of these. Primarily because today you can actually freeze a stable coin. Okay, so in the previous panel, if you realize, everyone was talking about standards and the real way that they could unlock large-scale adoption was basically through creating these interoperability standards. Why do you think stable coins have actually hit off so well? Everyone is against them. There are different kinds of discussions, etc. But at the core, they're doing this really well. Here is a rail which is global in nature, completely unbiased and neutral. Okay, so something like an Ethereum, not controlled by any one country, not dictated. The terms of it are not dictated by any one country. And then you're also able to create an asset on top of it, which is in some effect controllable. Some compliances can be implemented. I can freeze a wallet balance. And then I can probably, do some amount of traceability also, some amount of pseudonymity as well. So these are the reasons that today we see stable coins globally picking up so well. So
I was hoping somebody on the panel would say that, well, ultimately, if you're building payment rails, then you ought to have the financial regulators step in with financial regulation, whether existing or developed suo motu to, or from the ground up, to regulate stablecoins. I wonder why we choose to be ambiguous about it. And Abhijit, you mentioned, you kind of touched upon that a little bit. Who benefits from ambiguity here? What's the larger regulatory approach at play?
I would rather not go there because, who benefits or who loses, that's not the debate we should have. My point is very simple, but before that, just allow me, for half a minute, what I am thinking, my thinking as, once again, as a student of economics, the way there has been many comparison about it, there, in fact, I agree with what Megha was talking about. That CBDC and stablecoins, they sound similar, but they are not the same thing. That I am pretty clear in my mind. Stablecoin, the way I see it, is that ultimately stablecoins are a product of necessity by the entire market. When the market found out that there is a huge lack of trust about the cryptocurrencies, so then you are putting in stablecoins as a bridge between cryptocurrencies and the real currency, the fiat currency. So between fiat currency and cryptocurrency, stablecoin is actually you are pegging it to a dollar. And by the way, most of these stable coins, 99% of them are pegged to US dollar, no other currency. Even if we talk about, in the earlier session, people were talking about internationalization of rupee and other kind of things. Very nice idea, but it is not happening. Let us face the fact, it is not happening very soon. So if that is the fact, then obviously, then the point is that I would rather, from the economics point of view, I would rather treat, because once again, if stablecoin is different, then obviously it has to be, mined, or it has to be created by some private player. And if the private player is mining it and then, putting it into the market and pegging it, that there is an irony also, because, there is the entire fixed exchange rate we always talk about, it is actually antithetical to the market. But here, in fact, we are trying to promote stablecoin, where, in fact, de facto, we are putting in fixed exchange rate. So that is what we are doing. So then, if all these are true, then I would once again reiterate my viewpoint that since the market is ambiguous, since it is still evolving, so obviously you can't expect the RBI or any other central bank in any part of the world to be absolutely unambiguous.
So the market is ambiguous, market is evolving, and hence the regulatory approach of some kind of strategic ambiguity, we may call it that, is justified, is what I take from you. You also mentioned that there are a majority of stable coins are USD backed. Mandar, does that mean it's good time for us to have INR backed stable coins?
No, not necessarily. See, basically it has to solve a purpose. To my mind, INR backed stable coin may not have a use case. So we don't want a solution in search of a problem. Internally, we are sorted out in terms of P2P payments. Now P2M payments we heard at length from the previous panel. But if you see 50 million upwards merchants, about 450 million consumers, tapering, but 450 million is a significant number. And between them itself, you can see the velocity. Monthly, you get numbers from NPCI. So internally, we are sorted out in terms of the retail payments. We don't want to put a stable coin out there just because the United States is doing it, or tomorrow Japan might do it. It's important to find out a use case and then use the currency, abstraction, which a stable coin is, to solve that use case. Currently, I don't see a use case for it. The cross-border payment use case could be one potential use case, but for now, the market, because India is the biggest inbound remittance market, and basically we hover between 1 and 2, in terms of the volume. So that market is covered in terms of the current solutions, and in terms of the emerging solutions also. To the extent you want to off-ramp stablecoin just outside India in a compliant jurisdiction, in a compliant way, those practices, those structures are also emerging. So it's not yet time.
So if I may, the use case for INR-backed stablecoins is that you have an opportunity to be part of the global Rails network, but also address the regulatory concern of, as Abhijit mentioned, of having a majority USD-backed stablecoins.
Correct.
Quick answer.
But the caveat to it is global liquidity, right? The USDC and the USDT take from the global liquidity of the dollar, the demand for the dollar. Regrettably, as we've seen, internationalization of rupee is a journey that we'll have to take. It's over a period of time. As dollar trust erodes, perhaps, so that's one countervailing force. It could be that our trading partners ex of US might want to trade inter se so as to reduce reliance on the dollar. That could be one impulse. So it's a journey that we'll have to take, and over a period of time it will happen.
Manhar?
Yeah, so one slight, difference of opinion there is, what is then the use of a CBDC? Why are 26 countries today piloting their own CBDC? Probably more than that as well, right? Why is India piloting its CBDC? So I think the answer is for these wholesale settlement use cases, for eventually being part of this global rail or network, which is truly interoperable. I think INR stablecoin.
Why need stablecoins, right? As in the previous panel we discussed, CBDCs are India's stablecoin. Do you agree, disagree?
No. So they are very different. What I mean to say is the reason for a CBDC is primarily wholesale settlements. It's for programmable money, etc. The same use cases apply to stablecoin as well. And an INR stablecoin effectively can we've not seen any other stablecoins. Why? Why only dollar? That also begs the question. Because the dollar is a free-flowing currency, because the US benefits from propagating its dollar. Today, Europe is trying very hard to create a stablecoin, Euro stablecoin. But they're facing a bunch of challenges. They're trying to go compliance first. They're not getting the network effects. They're not getting that kind of adoption. And it's still progressing. It's progressing faster.
I'm going to continue with you. What will it take to scale CBDCs in India? What is the challenge? Is it a distribution problem? Is it the lack of a killer use case? What's the challenge?
So I'm going to go back to the previous panel, Mr. Balu. He made a very important point. He said it's not about the technology. It's not about creating this token. It's not about, it's about actually having that network effect where everything sort of aligns, where different parts come together to form that puzzle, right? The problem is the different parts today now are not within the country and within our control or within the control of one sovereign. They are now parts, of the whole globe. Now you need to align to those pieces. The more pieces that you have, or the more threads that you have that are common across, give you the opportunity to start from somewhere. And stablecoins provide that thread. They are that, absolutely global, neutral.
So according to you, we do not need to choose between CBDCs and stablecoins.
Both of them could be run.
Both of them should coexist or can coexist. And any of the panelists.
Can I just
Please.
go? Yeah. I'll just quickly address the latter question, the can. I would rather go with can question. If you think about currency competition, right? Used to be, before United States founded the Fed in 1913, that every state had its own currency and so forth, and every state had its own Federal Reserve, right? Federal Reserve is the American central bank, just as India has RBI. And they used to have an exchange rate and so forth. So the concept is, known to monetary history, right? So basically, stable coins and CBDCs can coexist, can compete in the same market, and then it basically is up to the party to choose the rail. Just as we might choose RTGS for institutional to institutional settlement, or we could go retail IMPS, right, for basically smaller payments and quick and whatnot. So that is the latter question, about the can or should question. About the former, why is CBDC not scaling in India? There are two aspects to it. Domestically, I've already pointed out, there is no use case, so it's like, a solution in search of a problem, really. We are trying to do it for social payments and so forth in Orissa, if you see. But that's going to be like, given the scale of AEPS already and so forth, I expect that to be also ran. We'll see how it goes. Of course, if the political capital is significant and so forth, which is, it will have to be divvied up between UPI and then the political economy of the instrument will take over. So far as cross-border use case of CBDC is concerned, it takes two to tango, right? Right now we saw Reserve Bank of Canada, Reserve Bank of Australia have stopped experimenting with retail versions of CBDC. The United States is against it. In fact, the Federal Reserve has categorically said that there is no case for CBDC. And the Trump administration instrument for attack has certainly been following the Genius Act and now the Clarity Act, stablecoins. That's how they're going to proliferate the dollar. That's their geopolitical angle, right? So for India to try and find a CBDC use case in cross-border context will require its trading partners. UAE is the second. There are about 9 or 10 trading partners, ex of US. Those will have to be ready. Perhaps BRICS could be one option, but then there are geopolitical considerations there. So that's the reason why CBDC is yet, for now, and also ran.
Megha, should or can coexist?
The issue of coexistence of these two new technologies, I would say, I think is a matter of time. And as on date, what I would say is that yes, in a way they can coexist, but again, as my friend has already pointed that out, the usage for both of these as on date is very different, because we are seeing programmable CBDCs which are coming up, which are being used or are planned to be used for the welfare schemes which the GOI already has, and making payments to the beneficiaries. But the similar usage is not there when it comes to the stablecoins technology. The other thing is that there is an issue of trust and consumer protection, I would say, the customer protection which is there, and the trust and the safety which people have in the digital rupee. So this is, I think, the reality of the day, and maybe in time to come, as this is an evolving area, we are definitely going to see changes.
Abhijit, the idea of currency competition is not new to economists, right? So, I mean, if you're a believer in that, if you are, do you think stablecoins and cryptocurrencies, CBDCs, should coexist?
For all practical reasons, I would believe that, they can. Whether should, it's a different question altogether. Because I am not getting into the entire, issue of trust, safety, and so on. That, those will be discussed in the, I think, session 4 and 5, in more detail. But without getting into that also, what I can definitely say is that stablecoin, for all practical purposes, what we can have at this point of time is once again, a USD-backed kind of a stablecoin we can have, most probably by a private player, which will be, more appropriate for the cross-border transactions. As, even he pointed out, very correctly, I agree on that point of view. And the CBDC's best case, when he is actually talking about, there is no user case inside, but there is a case outside, definitely. As Balu sir, pointed out very, succinctly, that the point is that you can't have a wallet without any rate of interest. There is no incentive. There is absolutely no incentive. You are just putting in currency. You are just putting in digital rupee into one wallet without any rate of interest. So, so that is why there is no user case. That is the real reason. That is the economic reason behind it. But there can be one case where actually cross-border payments can be made by CBDCs. That is also hypothetical and on theory. It is not happening. It's not that, the government or the RBI is not trying. They are trying, but without much result. That much I can say. Yes, both of them can, by pure market philosophy, both of them can. But whether they should or not, it's I think it's once again a very gray area.
Interesting. I'm going to change gears now and move towards regulation. And Ms. Sidhu, I'm going to start with you. In the last couple of years, the FIU has done a very good job of sort of bringing domestic players in particular under the compliance net, work very closely with the industry, and we are seeing the positive outcome of that. What I believe has not happened as successfully is bringing offshore platforms within the compliance net. There are plenty of offshore platforms that continue to target Indian users, and sometimes if you just look at the traffic volumes, they can be alarming, right? I believe, again, that this problem is also well known. Now, why is it that we have not been able to as successfully bring offshore platforms within the compliance net? I know we've put in the effort. There are several large platforms that are registered with the FIU, but many, many more that sort of operate outside of that compliance net. What's the bottleneck? Right? Is it just jurisdiction, enforcement capacity, a lack of legal trigger? How can we solve for it?
Yes. So the main issue which is bothering when it comes to compliance from the offshore WASPs is, first of all, I would like to say that FIU is working very like day and night in direction of onboarding the offshore WASPs in terms of the AML CFT compliance. And we have, I think, 3 or 4 foreign WASPs which have complied with the obligations after FIU's efforts. The other point is that the issue of this supervision of the offshore WASPs and the transactions which Indian domestic customers are entering through these foreign WASPs. So if we look at the Act, which is the PMLA, Prevention of Money Laundering, it allows that the registration of a service provider, virtual asset service provider, should be based on the basis of the activity it is performing rather than location basis. So our Act is very much aligned when it comes to the compliance part from the offshore WASPs. So technically we are very much well placed. But when it comes to the effectiveness of this, so we have seen as other countries all over the globe are having difficulties. Similarly, we also face issues related to international cooperation when any of the law enforcement agencies come across a case where funds have been transferred from India to abroad. And so there are issues in getting the information back from those countries. The main problem is the jurisdictional landscape and the differences, or I would say the uneven implementation of the standards which all the WASPs are required to comply with. So just to add on to this, we have recommendation 15. FATF is one of the intergovernmental bodies which looks after the WASPs related regulations, standards. So on the recommendation 15, it is very clearly mentioned that all the member countries are required to follow at least 4 or 5 steps which are there. So first is the identification of the risks associated with the sector, which is WASP. Another is the international cooperation mechanism should be very solid. So there should be LEA to LEA cooperation, FIU to FIU cooperation should be there. Then there is the issue of travel rule. So the travel rule which applies to other financial institutions via transfers, that also apply to the WASPs. And then there are other things regarding their registration, their licensing, and their supervision. So all countries are required to comply with these recommendations, but since this is an emerging area, we do see that there is uneven implementation of the standards. And that is one of the reasons which is maybe, I would say, the main supervisory challenge which we are facing, that the international cooperation due to this uneven implementation is difficult.
So a follow-on question, and I take it that international cooperation is a big challenge, understandably so. Also, what about the similar challenge domestically, right? Is interagency cooperation also a challenge? For example, Other levers we have are, say, blocking orders to pull offshore platforms that are targeting Indian users. Are we effectively and able to pull those levers, or interagency cooperation is also a challenge?
Definitely, as I see it in and out, the FIU and our nodal ministry here, finance as well as MHA, they are working very closely, and we have a division under MHA, which is the I4C, which looks after the new and emerging typologies related to the crypto sector, how the misuse of this particular sector is being done by the negative elements. So we, day in and day out, we see that. And the interagency cooperation, I would say, it is excellent at the moment, because it is the information within ministries, within departments is shared on real-time basis. And we have the FIU 2.0, which allows the information dissemination on real-time basis. And they do multiple outreaches monthly, weekly, with LEAs, with financial institutions, and yes. So the domestic cooperation is very much in line with our expectations, and that is very much visible in the number of investigations which we are having in this area.
In fact, when Manhar and I were talking day before, you had a brilliant idea of requiring, just like in the Companies Act, for example, requiring local incorporation of offshore WASPs to be able to exercise jurisdiction. Mandar, I see you have your mic up. Did you want to add anything here?
No, not really.
Yeah, some kind of local presence.
So just one quick thing there. See, because today we're being regulated, when I say we, the VDA industry at large, are being regulated by FIU. So what's happening is that let's say the TDS deductions, for example. So the local WASPs are all adhering to all the different compliances that are required as part of a company registration in India. And then, of course, all the agencies have complete access to information, to data, to consumer protection related discussions, etc., which does not fully apply to offshore WASPs. I think that's where the real challenge is. These registered WASPs also are complying on the AML fronts. They're taking care of all FIU related due diligences. However, outside of that ambit, there is a deficiency. So I think that's where the current challenge is. Yeah.
Manhar, I'm going to stick with you. And since you are in the business of providing infrastructure for global WASPs, which includes cybersecurity related infrastructure, are there any noteworthy trends? Is cybersecurity in the space getting more challenging or easier with the technology that we now have?
So, see, the thing with cybersecurity is that it's also an evolving process. And with every global challenge, and especially when you see such a paradigm shift or technology as path-breaking as VDAs, globally we've seen a lot of challenges on the cybersecurity front. And each of these challenges bring a fair amount of learnings to the industry overall. And then market dynamics force things to settle in a sort of stabilized phase. So today we are at that point. But it's always going to be a cat and mouse chase. You're always going to have to, keep trying to keep one step ahead. Largely, we've not seen any major innovations. So we saw a lot of DeFi-related innovations. We saw a lot of wallet-related innovations. We saw a bunch of those stable coins, different smart contracts, NFTs, etc. We've not seen any major, change. Therefore, the industry's got time to sort of study all the past challenges and then maybe build on them. Another important thing that we are seeing actively playing out in this is that a lot of traditional institutions are coming into the fray and trying to look at how can we build on top of these primitives, blockchain-based VDA primitives. They are bringing a lot of thought processes around governance, risk management, operational controls. What are the efficiencies that can be done? What are the control protocols that you can follow, to sort of create your wallets? So I think this is a very interesting phase right now. We are getting, what can I say? We are getting beefed up on both the sides, and this is overall helping the industry.
Any last comments on this? Otherwise, I'm going to open the floor and take questions from the audience.
Just continuing with what he was trying to say. If it is not a level playing field, then of course, industry has a, has an argument. Solid argument that, if we are complying with a hell lot of, domestic standards, and if somebody from outside is coming and operating in the same space without less kind of a standard, which I think will converge, I think the way, and it is converging also. The compliance, even the global compliance standard is more or less, sort of converging. Even in other countries, the central banks are actually doing the similar kind of things. They are just putting in the existing laws, particularly about money laundering and terror financing, and then, looking at the entire consumer safety and trust and so on, and then ring fencing the entire thing, and then waiting and watching. But then if that is not the case, then I think industry has a point there. I would say that.
Perfect, thank you. Yes, sir, we'll start with you, Dr. Balu.
So you talked about stable coins, right? I mean, there are multiple stable coins. So how do you address the singleness of money concept in a stable coin?
Can I go? Yeah, see, this singleness of money concept, right? It's more of a canard that incumbents have raised. I'll tell you why. For all practical reasons, you understand tail risk, you're from the sector. For all practical purposes, there is a consistency of an exchange rate between at what dollars you're going to exchange your USDC or USDT at. Okay? Hear me out. Except for tail risk situations, that by definition of tail risk, which we both know, and I think most in the audience would know, that tail risk situation happens in like once in a blue moon situation. That's literally the definition of tail risk. So absent that, the USDC is practically the US dollar, okay? Now, of course, 2008 happened, reserve primary happened, but those were different kind of securities. And, so my thesis around the caveat, excluding tail risk, singleness of money is preserved, is not affected by, those things. So I think it's really a canard, we should get around that. I mean, there are other arguments around stable coins that are more potent. Let's steelman those and address those instead of, talking about that stable coins lack singleness.
Okay, thank you.
This is for all of you. Anyone can take this question. I've covered the crypto space in India for many years and even globally. And my question is primarily around this, the perception that is emitted by people who are either running crypto-related companies, virtual digital assets, those in government, anyone in the ecosystem of this space, presenting a particular picture to the world, to India, particularly the citizens of India who are interested in getting involved in crypto, that, hey, we are going to get regulation. And I know that the government itself has said that they will come up with a comprehensive regulation, which they have not, and they have reasons for that. But is there a mismatch between what the industry or the ecosystem is telling the people that, yes, we're going to get it, it's going to be all good, but actually we've been waiting years and nothing has happened?
So the industry is, of course, hopeful. And industry continues to remain hopeful. And most of the players, even before any kind of regulatory intervention happened, I was a part of a major exchange. And I remember because of our interactions with the MAS in Singapore, we learned a great deal of things about how they were regulating this new digital asset. Okay, they had what is known as the Payment Service Act, and they used to refer to it as DPT, a digital payment token. So studying those regulations and working closely with them over months, we realized that, these are the kind of things that are required. You need to do transactions monitoring on chain. You need to have these kind of key mechanisms. You need to have these operational controls. We didn't have any reason to do it. Nobody was asking us to do it, but we went ahead and we implemented all of those as part of our enterprise. Why? Because we are not here for a few years. we're trying to build this into a large business which can maybe sustain over years. And we look at a future which this technology can actually bring in. So we look at it from that perspective. We're here to stay for the long, and we're absolutely hopeful. Now, on what's actually happening, I'm pretty sure everybody in the government and the dispensation is also trying actively. You know, like ma'am said, FIU is working day in, day out. They're trying to figure it out. They're trying to solve this now new loophole between offshore, onshore. So these things are happening. We see the progress because we're very close to it. Maybe people may not be able to see it. And you know that these small wins just keep adding to our, fueling our hope further, yeah.
Yeah, so just to add on to my friend, regulation, I would say, are already in place. So maybe, yes, from the customer's point of view, you won't be able to see that very often, but from a VASP point of view, it is very much there. They have been made the reporting entities. They have to file their STRs. They have to do the customer due diligence. They have to do the KYC. They should know from where the money is coming, who is the beneficial owner. So from that point of view, regulation is already there. And as far as the tax compliance part is concerned, we already have, the income tax has already recognized the sector as it is. So the regulation part is not something that will come in future, but in a phased manner, I would say it is coming up. And yes, this is an evolving, emerging new area for all of us, for the government as well. So the regulation is in place, and maybe a more comprehensive regulation might come. But that is just a personal opinion. But as far as responding to your question, it is not like the sector is totally unregulated. The regulation is still there. It is there, yes.
Sorry, just one more point here. And so it's very interesting. The role of the industry also is now then amplified further. To give you a very quick example, we're custodians. There was no concept of a FIU registration for a custodian in our country because primarily we had exchanges operating in the country. So, you know, having a very sort of dialogue with the regulators, with FIU, with everyone, we were able to actually achieve that. We were able to bring in. So, this is happening.
This question is actually a great way to end the session with, and I'll reserve the right to take the last shot at it. But you know, the cycle of hope and optimism around an industry and how long it actually takes for it to play out and turn into a meaningful industry. I have seen this play out so many times in so many industries that I've stopped asking the question, right? So we've seen this in Web3, of course. We're still asking. In fact, I started this session by saying that, you know, 3 years ago we were saying VDAs are the future of finance. Now it's narrowed down to speculation, etc. But stablecoins, which were merely an on-ramp, now today are running global payment rails. In drones, when, you know, now where the benefits of it are fairly obvious to anybody, 10 years ago when we were meeting the Directorate General of Civil Aviation for the very first time, the officers were asking, I mean, these are toys for wedding photography. Why should we spend any regulatory capacity on something like this, right? So it always takes a little while. Virtual reality, we're talking about it so much. American military has been working on it for the last 35 years now. So, you know, industries will go through their natural cycle, and many of them may not necessarily live up to the hype that was initially created, but that's okay. I think innovation for its own sake needs to be, you know, with the right kind of safeguards, be allowed to play out, I think. So maybe we can end this session with that.
And yes, I would also like to add the last comment that regulation is not something that a genuine customer should be afraid of. It is for the customer in first place. So it is for the protection of the rights of the customer. So if the regulation in this way or that way, it is coming up or it is still there, I think it is for the benefit of the people who are using that platform for investment or maybe for future payment modes.
Yeah, I think we've done a good job at closing the panel right on time. Thank you very much. You've been a great audience.
I would like to thank our panelists for not shying away from the hardest questions on what money in India would look like next. Before we move to the lunch, I would like to invite Dr. Bidisha Bhattacharya, Associate Fellow, Center for Economy and Trade, Chintan Research Foundation, to felicitate the guests.